What happens when 25,000 homes suddenly vanish from the housing market overnight? I'm talking completely gone. Before we jump into this week's Redfin update, we need to talk about something big that's happening right now. Thousands of homes have suddenly vanished from listing sites all over the country. This isn't just interesting. This shows us what's really happening in the housing market. Let me show you. We started the year with nearly 940,000 active homes for sale in the entire US. Now, only 907,000 homes for sale. We know that buying demand is at record low levels, and we know that new listings are rising. So in theory, active inventory of homes for sale should be going up. Yet, active listings have been dropping since the start of 2025. Not going up. So what in the world's going on? I mean, these homes just didn't disappear. Some of them were sold, but it's important to remember that buyer demand has been low for a while. In fact, Redfin data reveals that pending sales are down 6.2% year over year. So it's not like a flood of buyers have suddenly come off the sidelines in the last couple weeks. When I dig into the Redfin data, I can see that 25,000 homes have been delisted from the market. And the trend has been going up for a while now. What does all this mean in plain English? It means there are sellers that want to sell and sellers that need to sell. Those are two totally different situations. Sellers who simply want to sell oftentimes list their house at a price that attracts little to no buyers. They may let their home sit on the market for months and eventually cancel their listing and try again later. When they cancel the listing, that's a delisted property. It didn't sell. They just decided to take it off the market. In contrast, sellers that need to sell are motivated to make a sale. They price their homes competitively and many times continue to lower the price until they find a buyer. So here's what this means for you. When thousands of sellers remove their houses from the market, three significant things typically happen. First, the homes that remain on the market receive more attention because the stale inventory has been purged from the system. Second, some of the sellers who delisted will realize they need to relist at a lower price. And third, this is the important part, when the sellers who merely want to sell are removed from the market, the remaining listings oftentimes are motivated sellers. And that's where the opportunities come in for you as a buyer. If you're selling, this serves as a reminder that testing the waters with an overpriced listing no longer works. It's not 2021 anymore. Remember, as we navigate the ever-changing housing market, you got to change with it and adjust your strategies accordingly. Let's find out what else is happening in the housing market this week. This article from Redfin is called Home Price Growth Slows as Mortgage Rates Dip to the Lowest Level in Over 2 Months. Before I get to the rest of this article, though, do me a favor and comment below. I want to know what's happening in your neck of the woods. And stay tuned, because once I'm done reviewing all the national data, I'm going to review the markets that you all have requested on my channel. You don't want to miss that. And if you have a metro you want me to analyze, drop it in the comments. I'll get to it on the next Redfin update. Redfin says the median U.S. home price rose just 3.5% year over year during the 4 weeks ending February 23rd, the smallest increase since September. And mortgage rates have declined to their lowest level in more than 2 months, dipping from 7.13% to 6.78% in the last 2 weeks alone, and upping buyers' purchasing power by thousands of dollars. Mortgage rates are coming down due to signals that the U.S. economy is slowing and heightened recession fears. So comment below. Do you think a recession is coming? Are you fearful of a recession? Are we already in a recession? In addition to a bit of cost relief, another factor is working in buyers' favor. House hunters have a bit more power to negotiate on sale price and terms as supply piles up in some parts of the country. There are 4.6 months of supply on the market, up from 4 months at this time last year, and the typical home is selling for roughly 2% less than its asking price. A quick interruption to remind you to subscribe to The Housing Nerd. Thank you. Back to the video. Pending home sales are down 6.2% from a year earlier, in line with decreases we've seen since the start of the year. Even though mortgage rates have declined a bit, the typical monthly housing payment is just $32 shy of its all-time high. Sales could pick up in the coming weeks if the increase in home tours turns into more offers or mortgage rates coming down slightly. Here's some advice from a Redfin agent out in Sacramento, California. Hey, Sacktown, shout out to Jason Walter. All right, my advice to buyers, if you're thinking of purchasing a home in the next 6 months, don't wait until the flowers start blooming, said Allison Williams, a Redfin premier agent in Sacktown. The market will heat up as we get closer to spring. Now is the time to potentially negotiate down the price of a home, save money on closing costs, or get the sellers to cover issues uncovered in the inspection. There are bidding wars for relatively affordable homes under 400 grand and for upscale, fully renovated homes in popular neighborhoods. But for everything in between, buyers are looking online and touring, but not jumping in on them. The buyers who are jumping in are getting deals. This goes along with those delisted homes. You have a lot of sellers out there who have wish pricing. They wish their house would sell for this price, but they really don't need it to sell for that price. So the wish price homes are rotting. The homes where sellers are motivated and have at least priced their home so it can sell and attract some buyer attention, that's where these homes are moving. And if it's priced under market, you're going to get bidding wars. Oftentimes, if you list your home at market or slightly under market price, you can actually end up with a higher price than if you started high and came down. The strategy of, I'll start high, we can always come down on my list price, that doesn't work in a normal housing market. Did you know that? Let's dive into some of the leading indicators of demand. Daily average 30-year fixed mortgage rate, they have that at 6.78% as of February 26th. That's the lowest level since December 10th, and that's down from 7.13% last year. I got a question for you out there. What is your magic mortgage rate? In other words, what mortgage rate would you need to see in order for you to get off the sidelines and buy a property? Or is it only about price? Comment below. I want to know what your magic mortgage rate is. The key housing market data is next. And remember, this is just for the top 400 metros. It's not for every metro. First thing is median sale price, the house in the middle that sold, not the average. That's $377,250. It's only up 3.5% year over year. That year over year growth of 3.5%, that's the smallest increase since September. The pace at which home prices are growing year over year is slowing down. Thank goodness. Hey, do you like what you see in this video? If you do, give me a thumbs up and hit the like button. Here's that pending sales number. When a house goes into contract and a seller and a buyer agree on the terms, condition, prices, all that, and a contract is signed, that's when it goes pending. And that rate now is 6.2% less than it was this time last year. Only 73,415 homes went pending in the last 4 weeks. New listings of homes for sale, 81,553. That's up only 2.4% year over year. So while we certainly have more new listings of homes coming to the market, we really don't have the growth we need to explode active listings. Remember the promises of all the excess inventory and distressed selling that was going to flood the market from Airbnb, institutional investors, mom and pop investors, and just overall distress in the economy? Haven't seen it yet in the numbers. If you really want to be successful in the housing market, we have to play in reality, not hopes, wishes, and wants. And right now, there's only 907,000 active listings in the housing market. And by the way, that's only up 9.7% year over year. It's the smallest increase year over year in nearly a year. This number in actuality is lower than 907,000 because a good chunk of this inventory is probably inventory that is fake. It's wish pricing. It's sellers who want to sell, not need to sell. Comment below. I want to know from you. When do you think we'll see this flood of inventory hit the market? I'm going to skip down to median days on market. It's at 56 days. That's 6 days more than last year. And it's nearly the longest span since March of 2020, meaning it's taking longer right now in general to sell a home than it did over the last 4 to 5 years. Now it's time for everybody's favorite part of these videos. That's the metro level analysis. If you have a metro you want me to analyze on one of the Redfin updates, put it in the comments below and I'll get to it on the next video. So we're starting with Columbus, Ohio. You can see here, new listings up 0.8% year over year. barely a growth in new listings at all. Quite frankly, I'm shocked that there aren't more new listings in the area. But sellers have just basically said, you know what? Now is not the right time to move up. I'm going to stay put. Now we've got active homes for sale in Columbus, Ohio. They're up nearly 14% year over year. Nothing really to write home about. Pending sales in Columbus, Ohio. That's basically the buying demand. How many homes are going into contract? Up unbelievably. We're up, but it's up only 1.6%. Now remember, the US is down 6.2% with pending sales. So Columbus, opposite end of the spectrum. I can tell you if there's a house that hits the market that's priced right, it has everything people are looking for in a home, especially like a good yard, renovated, or if it's destroyed, but it's priced right, it does move. Right now, pending sales up 1.6% in CBUS. How about prices in Columbus, Ohio? Median sale price actually is flat, zero growth. Haven't seen this really since I've been doing these regular Redfin updates. You could see the median sale price last year in Columbus actually peaked at $354,000 in the summer. And then we ended the year at $328,000 in Columbus. But now 0% growth. We're basically flat year over year. We're going to stay in Ohio and go down to the nasty, natty Cincinnati, Ohio, down 3.3% with new listings. So less new listings than we had this time last year. It's just ridiculous. Now, active listings in Cincinnati, those are up 40.65%. They're up a ton. But notice that they've been flat recently. This tells me there's probably a lot of wish pricing, people that want to sell, not need to sell, because these homes, a lot of them, must be sitting there a really long time with no movement. Remember, new listings are down year over year in Cincinnati, not up. So it's not like we're adding active inventory that's good to the market. We're not really adding much inventory at all. I bet there's just a lot of expensive or overpriced dead inventory sitting there in Cincinnati. Pending sales in Cincinnati. How many homes are going into contract? Down 4.1%. So not quite as bad as national numbers where we're at negative 6.2%, but pending sales, buying demand in Cincinnati, much like the rest of the country, non-existent. Median sale price for Cincinnati, Ohio, it's actually up 8% year over year in the sale price. Yeah, can you believe it? 8%. It's now $287,000. Last year, they peaked. Looks like an all-time high in Cincinnati of $307,000 back last summer. And they ended the year last year up 10% at $285,000. Now we're going to head up to Cleveland, Ohio. Pending sales, or how many homes are going into contract in Cleveland, down 11%. Wow. Okay. Down 11%. That's a lot less. I mean, buying demand there must be crushed. Remember, new listings are down too. So nobody's buying, nobody's selling in Cleveland. And look at active homes for sale, down 3.75%. So you have their counterpart in the AFC North. They were up 40% in inventory year over year. That's Cincinnati. But in Cleveland, that we're looking at right now, they're down 3.75% in active inventory. Next stop on the tour of Got No Inventory is Detroit, Michigan. I got a lot of requests for Detroit. So if you ask for Detroit, here you go. Down 21% in new listings. 21%. Now look at active inventory. That's down 4.61% in Detroit. And pending sales in Detroit, that's down 13%. You're hoping for a price crash in Detroit, the Motor City. You're going to be waiting a long, long time. And pending sales, how many homes are actually going into contract? 7.1% down compared to last year. And it just gets worse. Look at active listings in Boise City, Idaho, down 30.57, call it 31%. Who's counting at this number? Down a ton compared to last year's inventory. And when I look at median sale price in Boise City, Idaho, I get $477,000. That's up 2.5% year over year. In fact, and here's the crazy part, the prices at Boise City, they're different than they were in Cleveland, Columbus, and Cincinnati, and how they behave. Because look back in 2022 at Boise City. That was the peak. May of 2022, they were at $546,000. And now they're at $477,000. So they've come down from the peak substantially. And there's many cities like this across the country where they were kind of COVID boom towns. And then when that, romance wore off and people kind of woke up to reality, they all listed their homes back in 2022 when rates went wacky and sold off. So you can see that prices definitely have come down overall in Boise City in the last couple of years. But right now, they're starting to go up again. This dearth in new listings is really starting to get annoying. Look at Virginia Beach, Virginia, down 5.2% in new listings year over year. Just ridiculous. It's a 4-year low. It's a 4-year low in many of these areas. Look at pending sales, down 9.4% year over year in Virginia Beach, Virginia. Pending sales in Virginia Beach, Virginia, that's down 9.4% year over year. So both buyers and sellers are kind of taking a break right now. Now, unlike some of the other areas we've already looked at today, active inventory is actually only up about 6% year over year. It is a 4-year high, but it's starting to head down. Why would it head down? Well, when you've got a lot less new listings, then you add into those delisted properties I've been talking about, clearly you're going to have lower active listings. Now let's look at median sale price in Virginia Beach, 344 grand. That's up about 6% if you round up, or 5.6% if you want to be exactly right. And so year over year, prices have not crashed in Virginia Beach, Virginia. In fact, take a look at this. Last year, Virginia Beach, they peaked at $367,000 in their median sale price. And it actually ended last year at $358,000, up 7% year over year. And they started this year higher than they started last year. They started this year at 353 grand. Now they're at $344,000. Point being, they've gone up every single year. And pending sales, how are they doing? They're down 1.1%. So far, we've got a recipe for more active listings. Let's find out if that's true. Yeah, look at this. Active listings in Sacramento, California, 23.66, call it 24% up year over year. So a lot more active listings than this time last year. Again, every housing market's different, obviously. Now, median sale price in Sacramento, $591,000. That's up 4.5% year over year. It's actually right now, folks, a 4-year high in median sale price for Sacramento. Now, they have a lot more inventory than they did this time last year. They have more new listings and pending sales are down. So you would think at some point, median sale price would adjust. Next stop on our tour is Greenville, South Carolina. New listings down 0.8% year over year. Less new listings than last year. Pending sales are actually up surprisingly, considering the fact that most metros are down, but pending sales are up 2% year over year. So a little more growth as far as activity goes. Active listings in Greenville, South Carolina, 3% growth year over year. So you have a little bit more inventory than you did this time last year, but not much. Look at this, a metro where median sale price is actually under last year, down 1% for Greenville, South Carolina when it comes to the median sale price, $323,000. They peaked last July at 338 grand, ended the year up at $327,000, up about 1% or so. But right now sitting at 323,000. Overall, hasn't crashed, even though you're down year over year. I would say as this goes along, if you can add more inventory, right now you have a little bit more inventory, but if you can add exponentially more inventory, keep the demand low, probably see more inventory hit the market. Hopefully it's good inventory, not delisted inventory, and that should help with some price discovery. Next stop is Oklahoma City, Oklahoma, down 5.5% with new listings year over year. Man, a lot of these cities we're looking at today are suffering when it comes to new listings. Just nothing hitting the market. Look at median sale price, now $264,000. That's up about 2% year over year. Last year with median sale price, Oklahoma City peaked at $275 back in May, and they ended the year at $258,000, up about 3.5%. All right, now we go out to the East Coast to Atlantic City, New Jersey. That was a request. So 3.1% growth in new listings in Atlantic City. So a little bit more activity on the seller side. That's probably good for inventory. But we got to find out, did it actually stick? Well, pending sales are down 11%. So one would think active inventory is probably rising. Active inventory is actually increasing, but you're still not up year over year. You're actually flat year over year in active listings. Median sale price for Atlantic City, $321,000, growth of 3.3%. Atlantic City, New Jersey peaked at $398,000 last year, actually last fall. That was a growth at that point. Are you sitting down? 18%, 19% if you're rounding year over year. Prices on the East Coast, Northeast in particular, are just off the hook. Atlantic City ended at $355,000. That was up 9.7% year over year. They started this year at $364,000, up 14%. Just no price relief in an area like Atlantic City, New Jersey. I'm curious to hear what you learned on this Redfin update today. One of the things that stood out to me was that active listings are actually dropping. They're not going up nationally year over year right now. I would think there would be a lot more motivated sellers, people having to sell and needing to sell, not wanting to sell, but obviously that's not the case yet. If you're a buyer, listen up. This is a great time to go out and find an opportunity, because when the homes are delisted like they have been, you're going to see some of those come back on the market. When you see that, oftentimes they come with a lower price when they're relisted. If that happens, it could be a time to make a disrespectful offer and snag a deal. I just did a video showing where I found some motivated sellers and some tips on how you can do the same things using Zillow. You should check that video out. A good way to find motivated sellers is by using a platform like Zillow. And I just made a video that shows you how to jump on Zillow and find out what's really going on with some of these listings. I found some huge price cuts and sellers that are certainly motivated given the days on market and all the price cuts they've had. And you can check that video out right here. One of the great ways to find a motivated seller is to use a platform like Zillow. I just did a video on how to find motivated sellers on Zillow. You can check it out right here, right there.